afternoon, everyone, and welcome to Castrol India's Q4 and CY17 results conference call. Today, we have the senior management represented by Mr. Omar Doman, Managing Director, and Ms. Rashmi Joshi, CFO and Whole-Time Director, to address the call. Before we start, I would like to mention that today's conference call, some of the statements might be forward-looking in nature. I would now request the management to make their opening remarks. Thank you, and over to you.
Good afternoon, Raghav. Good afternoon, everyone, and welcome to this quarter's analysis call, where we will be looking at talking about the Q4 performance of 2017 as well as the full year, which were announced following our board meeting of yesterday. Let me start by saying that we are extremely pleased with Castrol India's Q4 performance, delivered by the highest Q4 volume in the last 10 years, and recording not only exceptional growth versus last year quarter, but also quarter-on-quarter. We've seen 16% volume growth year-on-year and 11% growth versus the previous quarter. Similarly, our 2H performance in terms of volumes were the highest in the last 10 years, driven by double-digit growth in personal mobility and premium brands. I'm very proud that we were able to record a very strong comeback in 2H of 2017 after a really rough start to the year, especially in June quarter. This was made possible by the really sheer determination and commitment of the Castrol India team and all our distributor partners. What I'm really pleased about these results is the strong financial delivery driven by strong volume growth, as I mentioned, and this is for the second successive year despite a tough operating environment. Our growth strategy, it looks like it's well on track, and most importantly, we're doing all this in a really safe and compliant manner. As I mentioned, volumes are up for the second successive year, led by strong growth in personal mobility and premium brands. We are aggressively expanding our distribution and aggressively acquiring customers. Net profit for the fourth quarter is up 30%, and sales for the quarter were up 24% on a like-for-like basis and year-on-year. And of course, you can't compare the reported numbers because of the changes in the treatment of indirect tax and post-GST implementation. And although we were hit by significant cost increase in input cost increase in second quarter and in 2017, we were able to recover most of that increase because of our brand strength and because of our responsiveness in the marketplace. We continue to maintain our market leadership position in the automotive lubricant markets, accounting approximately 1/5 of the total market at an overall level. We have grown ahead of the market in personal mobility and grown with the market in terms of CVO. Our power brands now have also significantly grown, as I said, during the year. It was also really pleasing to hear that just a day ago, we have just announced the establishing of a global partnership with Renault-Nissan Alliance, one of the largest global automotive car makers. In addition to the continuation of Renault Formula One sponsorship and the supply of fuels and lubricants by BP and Castrol, the partnership will also include a strategic collaboration for advanced mobility solutions. We also continue locally our partnership with leading OEMs like Maruti, Tata, and during the year we entered into a new agreement with Piaggio and extended our existing partnership with Volkswagen Group and Volvo Cars. So, if you look at the progress, we continue to invest in growth to the tune of about 100 crores with capital expenditure. Last year, the company set up a new state-of-the-art technology laboratory within its Silvassa facility. This laboratory is being used to test products and provide technology insights, as well as expert support to all our customers. And of course, we continue to invest in our market-leading brands, technology, visibility, advocacy, and delivering outstanding customer experience at all levels and touch points. And I must say, globally as well as locally, Castrol is preparing the business for the long-term future by developing and testing new business models so that we have the capabilities to take advantage of market changes in the mid but also long term beyond 2030. And that will include low carbon mobility and digitization. So to summarize, a really great performance in 2017, especially in the second half, where we had a strong and remarkable turnaround, despite all the external challenges. And we all believe and confident that our growth strategy is working well, and we're confident of building on the strong platform that we've created in the second half of the year, and really excited about the opportunities ahead of us in 2018. So I now would like to ask Rashmi to also share her thoughts.
Thank you, Omar, and good afternoon, everyone. I would just like to add to what Omar said, that we continue to maintain a healthy gross profit percentage ratio to sales, which is 55%. We continue to manage our costs very well, within 48% of our gross profit. We also continue to do very well on the working capital management side, with negative working capital as usual. The return on sales is a healthy 30%, and return on net worth is close to 70%. You would remember that the company also issued bonus shares in the ratio of 1:1 in December, and we upped our dividend by 5%, the final dividend, in the meeting that happened yesterday. I think we remain very strong in managing the business very closely, and the momentum that we've got in second half, or last quarter especially, will set us up for growth in future. With that, I think we open the floor for questions.
Over to you.
Sure, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Also, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The first question is from the line of Akshay Bhor from Kotak Securities. Please go ahead.
Good afternoon, and thank you for taking my question. First one is on what is the industry demand doing? As you said that you outperformed the industry, but on the CV and personal mobility space, what's the growth rate like in the industry? And second question is, what has changed with respect to Castrol in the second half? How could you deliver such numbers? I mean, what has changed in the strategy?
Okay, so when you say industry, probably are you referring to the lube market growth?
Absolutely, yeah.
Yeah. So according to our estimate, the lube market growth is about 3% for the year, for 2017, and it's recovered in the second half of the year. If you remember, we mentioned the last time that the first half was almost negative. Actually, it was negative, and then recovered in the second half. And the second question that you ask is actually maybe it's a surprise for you, but it's not a surprise for us that we're delivering such strong results, because the fundamentals of the business were always really strong, and we kept on investing into our strategy, in line with our strategy, behind our brand, behind our customer expansion, distributor expansion and customer acquisition, as well as our capability. So if you look at where we play in terms of the balanced portfolio, from automotive to industry to heavy duty, Castrol is present in all these spaces and has leadership in all these spaces. So when the market picks up, we have an advantage and opportunity to take our fair share, which is in line with our strategy. So if you look at it, I mean, it's no surprise that we've delivered such strong results because that's been behind the strategy in terms of investment. That's what we're doing.
Good, thank you. I'll leave it at that.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. The next question is from the line of Viraj Kacharia from Securities Investment Management. Please go ahead.
Yeah, thanks for the opportunity. Just have two questions. First is on the raw material front. You mentioned that we are fully covered for the cost increase we have seen in Q2. But considering there's been further increase in base oil and crude prices, does the current gross margin also cover for any increase we have seen in Q3, or we will have to take some pricing action? That is one.
Okay, so answering the first question, yes, we took price increases in 2017 to offset the COGS increase. And then because the COGS increase continued this time, if you look at 2017, the input cost increased irrespective of the crude prices. And then in the last quarter, crude prices started increasing, and we were expecting base oil prices to come down. And actually they didn't. They continued increasing. And to offset that, we also launched another price increase beginning of this year, which is now in the market, which is again directed at recovering the COGS increase.
How much would the price increase be, roughly?
Well, I mean, we looked at different SKUs and looking at the impact of the COGS increase, the base oil increase in our portfolio. Very difficult to say, but I can give you a range of about probably 3% to 4% increase.
And in CY17, how much would the price increase cumulative would have been?
We took we took two price increases. One was in December 2016 and one in May 2017. Cumulatively, I would say probably about no more than that, because we did it. Yeah, I mean, it's about close to 10% probably, right? 8 to 10%. If you look at it again, it's very difficult because some products had larger increases, some didn't, because of the impact of base oil in those products. Because base oil is only one input into our product formulation. We have additives, we have other costs that impact our profitability.
Okay, the second question was on the, if we see a growth profile in the second half, and if you look at our overall, hello?
Yeah?
Yeah, and if you look at the overall margin profile we've been clocking. So my question is, as you mentioned that in the past when the times were bad in the industry, we still continue to invest in terms of branding, in terms of distribution expansion, and and on the marketing front. Now, considering that we are seeing the growth in the industry and for both also growth for Castrol, do we see any need for further increase in investment, or we believe that the current level of investments in terms of P&L they are sufficient to us to maintain or further grow?
So the investment levels are of course there to support the growth. So we have goals for the next midterm, for the next 2-3 years. And to support that growth, we have an investment plan. The investment plan is adjusted for the growth. So we look at the growth opportunity and then accordingly we resources. So it's not only investment, it's about our resources in terms of people resources, in terms of our capability resources. We do continue to invest because you can't continue doing the same thing and expect growth to come. So that's why ahead of the growth, we of course put money into and resources into that growth.
Okay, so basically what I was trying to understand, if you look at our overall margin profile, this is a quarter and the previous quarter we've seen a good amount of gain from operating leverage, and as you said in the past, we have been making these investments. So obviously, if we see the industry recovering, and also benefiting Castrol, will we see a proportionate increase in investments, or we would see, that the kind of investments you made in the past, it
We
may
will
not grow
continue
in
investing in line with our expectation, in line with our goals. So we have the investment profile for 2018, and it's in line with the growth that we're expecting from 2018.
Okay, thank you.
Thank you. The next question is from the line of Basant Patil from HDFC Securities. Please go ahead.
Hello, sir. Yeah, thank you for giving an opportunity, and congratulations on the good set of numbers. Sir, just wanted to understand for the growth, actually what we have delivered the 16% volume growth. So can you please explain in detail which are the segments actually which given the aggressive growth? So just wanted to get the more sense on that numbers. Is that kind of growth sustainable going ahead for a couple of quarters? So what is our targets in that segment?
Yeah, so I'll take that question. If you see the fourth quarter, the growth has been across segments of the whole of automotive segment, including the CVA. We saw double-digit growth in personal mobility as well as CV segment. Industrial was a bit lower than last year, but the rest of it was significantly higher. So we are with all the initiatives we have taken in the market during the year, the work we have done on customer acquisitions, aggressive distribution expansion, investment in brands and technology, and also investments in creating a premium brand experience for the customers. We believe, we would like to see this momentum continuing going forward, and I think all these inputs will help us do that.
So going ahead, we can assume that this kind of the gross margins could be maintained irrespective of the increase in base oil prices?
So it's always our attempt to hold on to the gross margin, but it depends on the competitive intensity and our strategy for each brand and product. So there is no one answer that fits all. We take actions based on the cost of goods increases and the brand positioning that we like to have.
And madam, can you, what is the targeted amount for CY18 in terms of the advertising and branding expenditure? What is our target amount set?
So we usually spend between 4 to 6% of turnover on advertising, and we will spend similar amount this year.
Thank you. Before we take the next question, we'd like to remind participants that in order to ensure that the management is able to address questions from all participants of the conference, please limit your questions to 2 per participant. The next question is from the line of Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good afternoon and congratulations on good set of numbers. First thing is, I've got 3 questions. The first is the volume breakup among motorcycle, passenger cars, CVs and industrial for the full year. That's the first question.
So as we said, our CV is around 50%, personal mobility is 40%, and broadly the rest is industrial.
So on an average, from what you said last time, basically it was around 42-43% was the personal mobility. So that has come down slightly?
No, it hasn't come down, but we don't give exact numbers.
Okay, so it has largely remained similar to what it was, say, 6-7 months back,
yes.
Right? Okay, and second question is on this base oil pricing trend. Now that we are like halfway down the quarter and oil prices have gone to 67, 68. So versus Q4 of calendar year 17, what is the base oil pricing trend currently?
So I won't be able to discuss exact numbers of base oil prices. All I can say is that if there is a change in crude, that change is reflected in base oil pricing with a lag, subject to of course what happens in the base oil refining industry as well. So there could be availability issues. Right now we are not hearing any of those. So we are assuming that broadly the prices will follow the crude with a lag of about 2 months or 3 months. And that's what we expect.
So there's no availability. In the earlier part of the year, there were some disconnect between crude prices and base oil prices because of those refinery outages. So nothing of that sort is happening at the moment.
So at the moment, there's nothing of that sort that I've heard of.
Okay, so okay, fine. And third question is on your plant capacity. So currently, what is the plant capacity, and is there any expansion plans being there?
We have the plant capacity is 280 million liters.
Okay.
We believe that we do not need additional plants to be set up. We have capacity to go up another 20 to 30% over this by introducing another shift. So we believe we do not need to invest in new plants. We have 3 plants in the country, and 2 in west and one in east, and I think they are adequate for future demand.
Thank you. The next question is from the line of Aditya Makaria from Motilal Oswal Asset Management Company. Please go ahead.
Yeah. Hi, everybody. Congratulations for a good result. So, I had 2 questions. First was, in some earlier meetings, you had alluded to, some margin pressure because of competition. And now clearly you've, gone back to your heydays in terms of margins. So, are you gaining back market share in have you gained back market share in any of the segments? And how should we look at margins over the next 2 to 3 years?
So, in terms of market share, I'll say that at an overall level, we've improved our market share by a percentage point. On the personal mobility side, again, on motorcycle oils, we have improved our market share. Even in commercial vehicles, some of the segments, we have significantly improved our market share. Going forward, sorry, what was the second question?
No, so you did see margin pressures in the past, and you had mentioned that's because of, the higher competition. But now you've gone back to, 30% plus. So do we expect margin pressures from competitive intensity, or you think the worst is behind?
So the competitive intensity is here to stay, but I think we have taken certain steps during last 1 or 2 years to strengthen our brand distribution, and we started acquiring new customers, and there's a lot of work being done as inputs, and there are investments being made, and that is being reflected in the current momentum, is how I would put it. So while competitive intensity will be there, and we'll have to keep responding to it from time to time, our attempt will be always to hold on to this kind of profitability.
Thank you. The next question is from the line of Ashwarya Agarwal from Reliance Mutual Fund. Please go ahead.
Yeah, thank you very much, sir and madam. Many congratulations. Good set of numbers. Just 2 questions. One is how we should see, what is the CV growth number for the quarter, and what's the view on the CV volume growth in future?
So the CVO quarter on quarter, if you quarter on quarter was versus 2016, was double digits.
Sure. You said QOQ, there is a double-digit growth in CV.
Yeah, so Q4 17 to Q4 16 is double digits.
YOY.
Yeah.
And on QOQ, sir?
Again, it will be double digits.
Okay. And what has led to such kind of growth, and how is the sustainability of these growth numbers?
So we always said that personal mobility will grow ahead of the market, and CVO will grow with the market. And I think it's the revival of the economy in the second half of the year, which gave a strong platform for our CVO moving to continue increasing. Now, we took advantage of expanding our customer base, as well as making sure that we have the right products and the right pricing in the marketplace. So that helped to take advantage of that growth. But if the market is not growing, there's limited amount of actions you can take, and that's been the case because 50% of our volume is CVO, and if CVO market is not delivering and growing, it's very limited how much we can grow our total business.
Thank you. The next question is from the line of Lakshmi Narayan from Catamaran. Please go ahead.
Yeah, thanks for taking my question. I have 2 questions. First is the employee benefit expense for the year ended December 31, 2016, as per annual report was 172.56, whereas the Q4 table BSE seems to have a different number, which is 178. And then ended 2017, it has gone to 195.6. So seems to be, if I look at the last 2-3 years, the employee benefit expense has actually gone up. In this year, looks slightly on the higher side. Is it because of you added more people? Can you just give some color on that? The second question is related to the CVO volume share per se, which is that if you look at in the last 1 year, what has been the CVO volume contribution and also the agriculture contribution, right? Because you say CVO is inclusive of agriculture also. If you can just separate out how much is your CVO for the full year volume and how much is agriculture, and what has been the growth in both of these things.
Okay, so let me take the question on employee benefit first. So employee benefit cost, as you would expect, will go up because we need to pay salary rises to people in line with inflation. So there is a process in place to do a benchmarking against the industry. In order to retain talent and to attract the right talent, we give the right amount of increases to people. So a large part of expenses relating to the salary increases. In the current year, there is some addition of people also, but not significant, about 20-25 people. That has happened during the year, but it wasn't significant. So that's the reason why employee expenses are higher. On CVO volume, I would say around...
One question, because your annual report gives a different number.
So what's the number you have from annual report?
Report says 172.56.
And what's the current ad saying?
Current one says 178. So why is there
it's because of Ind AS transition. It reflects an adjustment of certain expenses that we need to, especially on employee share options, that we need to value and put it as expense in the books.
Okay.
It wasn't required under Indian GAAP.
So this 195.6 and 178 are like to like?
Yes.
Okay, fair enough. Yeah.
And let me tell you this, you asked the full year commercial oil sales. Actually, full year sales is slightly lower than 2016, and that's the impact of quarter one and quarter two. Despite the recovery in second half, we were not able to recover the full volume. Agri is about 7% of the total volume.
Thank you. The next question is from the line of Karthik Krishnan from B&K Securities.
Hello.
Yes, you may go ahead with the question, Mr. Krishnan.
Hello. Is it audible?
Yes.
Thanks for the opportunity, and I understand that we have taken a cumulative price increase of around 8 to 10% and by putting together December 16 and May 17 price hike. But in one of the earlier calls, it was mentioned that Castrol has a GST benefit of around, say, 10% when the tax bracket moved from 28 to 18. So how should one consider the total amount of price hike taken, say, 10 and another 10 because of the GST benefit, or was that passed on, or can you just put some color on it?
So GST, I wouldn't call it GST benefit. It was a rate change, and it was passed on from day one to on the final product. So we changed our MRP in line with the change in the rate for the retail channel. For B2B customers, it automatically changed because it's cost plus taxes. So we shouldn't correlate GST change with price increase. Price increase was a separate action which was done because we had cost of goods increases and we had to recover those.
Okay, fine, got it. And the other point, I couldn't understand that one. You mentioned the volume breakup between personal mobility and CV is roughly personal mobility with 40% and CV 50%. That is the breakup of your auto, split, or that is across your entire portfolio?
Castrol India volume split.
And so industrials is roughly 10%.
Yeah.
Thank you. That's it from me.
Thank you. The next question is from the line of Vivek Sethia from Stewart and Mackintosh. Please go ahead.
Good afternoon, ma'am. Good afternoon, sir. So if you could just throw some light on the market share which you have right now at present.
Market share is so at the total level. Eh?
Yeah.
Market share is around 20%, as Rashmi said.
Sorry?
Market share is about 20% at an overall level.
Okay. And sir, earlier you just said that you had achieved something in which you have never achieved in the last 10 years. Could you just please repeat what you said about that thing?
It was the highest volume, second half volume. So that's July to December was the highest volume in the last 10 years.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Jay Sri Ram from Karvi Stock Broking. Please go ahead.
Oh, thank you very much for taking my question. My first question is based on, with the transition to BS6, do we see any investments in terms of technology for the oil, or is it a substantial investment that needs to be made?
So the transition to BS6 investment is already in the pipeline, and that's part of our technology investment that we take on an annual basis. So we already started investing and being ready for that, and there will be more investment in 2018 and 2019.
Okay, and what would be your bazaar to OEM proportion?
I would say, do you have the
So out of our 75% of our automotive volume comes from bazaar.
Okay, and the rest?
OEM would be about 10% of total Castrol now.
And then the rest will be heavy duty.
Heavy duty.
Yeah.
Okay. Thank you very much.
Thank you. The next question is from the line of Mahesh Bhattad from Cap Gemini. Please go ahead.
Hi, I had two questions actually, but I'll go with the first one. What is your take on this whole electric vehicles thing? I've read some articles where they said that at least in the mobility space, the usage of lubricants will not be as much as it is for petrol or diesel cars. I know I'm talking about a question that is 10 or 15 years down the line for Indian market, but just wanted your view on it. And second is your view on some global players planning to enter or expand capacity in India. So your view on the competition and impact on pricing. Thanks.
Okay, so let me start with the first question. So we don't see a major impact in the lubricant market growth in India for the next 10 to 12 years. So we expect market to continue growing up to 2030. So that's why we're quite excited about the opportunities for the next 12 years in terms of the potential that India market presents to us. Of course, we also expect that the share of electric vehicles will continue increasing, but in terms of the impact in the lubricant market, we don't expect any major change up to 2030. Now, having said that, of course, this is something that we closely are involved in terms of looking at the new business models, the new business opportunities in terms of advanced mobility solutions, digitization, and what role we're going to play together with our OEMs. And I mentioned the new alliance with Renault-Nissan Alliance, and that also covers an advanced mobility solution working together to understand the new business models. So there are lots of changing dynamics. And one thing that we need to also be aware of, there's a lot of investment also behind conventional engines in terms of improving the efficiency in the marketplace. So I think, over the next 10 years, we need to ensure that we have products suitable for those engines, providing efficiency towards low carbon emissions, and making sure that we transition that to a low carbon emission up to the electric vehicles. And one more thing that we play equally well in different spaces. So we have, of course, personal mobility as well as commercial, as well as industrial. And electric vehicles is only one portion of our business. and electric vehicles maybe are not going to use engine oils, but they still use other specialty products. And on top of that, we still have a very sizable commercial business, very sizable industrial business, which hopefully will continue growing in India. So, yeah, I mean, I don't think we see a major issue in the next 12 years. But beyond 2030, of course, we already started working on different business models. The second question was on, I think, competitors, if I get it right. Of course, we have more than 200 players in the marketplace, and India lubricant market is a large market, and there are many players that play equally well. Castrol has been in this market for more than 100 years now, and actually we're going to celebrate our 100th year next year in terms of legal entity. And when in 1990s the market changed, Castrol stuck with the market and actually created this market, the bazaar market in India. And so we have a huge commitment to India market. We have huge commitment to growing with the India market, and hopefully we're here to stay for another 100 years.
Okay, thank you so much. Good luck.
Thank you.
Thank you. The next question is from the line of Saurabh Jain from HSBC. Please go ahead.
Yes, thanks for the opportunity. I just want some clarity on the price increases, if I got it right. So till May, we had taken a total of 8 to 10% price increase, right? And then another 3 to 4% in 4Q?
3 to 4 is in January. Cumulatively, as I said, it's a very rough estimate to take 8 to 10% because you need to look at the range. There are some products which maybe they didn't even get a price increase. There were some products that got a higher price increase. So that's what you're asking for a range. That's why I gave you the range. But what is correct is that we've taken now in the last 14 months, we've taken our third price increase, and the last price increase was in January 2018.
Okay, and also could you share your absolute volumes sold in automotive and non-automotive, or maybe a total?
Total 54 million liters.
54 million?
In the quarter.
Q4 was 54.4 million liters. Full year was about 205 million liters.
Okay. Okay. And you also mentioned about new customer acquisition. Can you throw some more light on what new customers have you added?
So, I mean, I mentioned that we operate in different market spaces, and we had, in the first half of the year, we had an agenda in line with our strategy to aggressively expand our customer base and reach. As you know, we have 80,000 plus customers that we service through our distributors. And there was a focus of expanding that base into rural as well as into urban sites, and that was one area. And then we also focus on increasing through our distributors again our B2B reach in terms of industrial as well as heavy duty customers. So we've added a sizable number of new customers and expanded our reach in terms of our distribution in 2017.
Okay, and in fourth quarter in particular, any high uptick on this customer addition, or it was more spread out throughout the?
So I think we were able to yield the dividend of the focus in the first half or the first 9 months. Where, I mean, you can't just focus on it in one quarter and then expect the results. So it's been since 2016 we've been focusing on that, and we accelerated that in the first half, and we see that returning results, and we'll continue on investing into customer expansion. And when you look at the size of Castrol and the reach of Castrol, it's not that easy to expand it because we're already available in the marketplace. But increasing that availability and connecting with more customers is our goal, and we'll continue doing that.
Sure, thank you. Very helpful.
Thank you. The next question is from the line of Ashi Anand from Allegro Capital Advisors. Please go ahead.
Yes, hi, good afternoon. Congratulations on a good set of numbers. The first question is with relation to over the last few years, we've been doing a gradual shift away from lower valued auto oils and industrial oils, which you'd mentioned was impacting the volume growth. I just wanted to understand where we are in terms of that particular transition.
So Castrol strategy focuses on premium side of the market. So we don't play in different segments of the market. So we play into premium and we play into mass premium. The good thing that we're seeing is that the Indian market is also catching up with the global standards and narrowing the gap between the premium brands as well as the lower brands. So the market is coming towards Castrol, which is good news. It's also good news for consumers. That means they have access to premium products and up-to-date products. And this is what the customers require. This is what automotive as well as vehicle manufacturers require.
Okay. The second question would be, as you had mentioned earlier, that the market has more than 200 players. Now, when we're in an environment where emission norms are tightening, the overall auto industry is premiumizing in terms of the kind of vehicles being sold, and you also have the whole impact of GST. I just wanted to understand your perception in terms of how the regional and smaller players would actually fare in these kind of market dynamics, and what kind of, say, market share could we look at 3 to 5 years down the line?
So I think it's, especially post-GST, is something that we need to monitor, and it's too early to say anything about it. But my expectation is, of course, with all the investment requirements in terms of the emission norms as well as the technology required for the new OEMs, I expect the market will be shifting away from the unorganized sector to organized sector. Which is also probably a good news for established players like Castrol. But it's too early to say that, but maybe towards the end of 2018, after 1 year after GST, we should be able to comment on whether we've seen a significant shift.
Okay, and would you have any even tentative estimates in terms of what is the market size that the unorganized players have? I know there are no published numbers out there, but even see your best guess or best estimate in terms of how large the unorganized market is?
There are various estimates, and it's very difficult to comment on it because it depends on where you draw the line in terms of organized and unorganized. I mean, so it's very difficult. But I would say, a large majority of the market is served by branded players who have been established for years. And that's why I'm saying it will be interesting to see whether that branded players are increasing their share in the overall portfolio. And 2018, end of 2018 will be a good time to review that.
Okay, excellent. Thanks a lot. Wish you all the best.
Thanks.
Thank you. The next question is from the line of Srinivas Seshadri from Mirabilis. Thank you.
Yeah, hi, good afternoon. My first question is regarding market growth expectations. See, this year it was all over the place because of GST and the trail impact of demonetization. While in 2016, obviously the market was buoyant for most part of the year. So broadly speaking, for market as well as Castrol, do you see 2018? I mean, barring any unforeseen kind of circumstances, being more like 2016, or do you see any challenges visible to you? For instance, maybe higher fuel oil prices impacting consumption, etc. So that's the first question.
So I mean, it's quite a straight answer. Knowing what we know today, I think we're quite optimistic about the market growth in 2018. But I think I need to underline knowing what we know, because there may be external challenges that we haven't foreseen. And the good thing that we know as Castrol team is shown in 2017 is whatever the external challenges are, we prepare to respond to it in a positive way. But today, looking at where we are today, I think the signs are positive for a good growth in 2018.
Sure. And secondly, a two-part question on the CV market. Firstly, in your prepared comments in the press release, you mentioned that you gained market share by taking certain initiatives. If you could elaborate on that. And the second question is with respect to the specific announcement of Tata's to launch their own branded CV oils. Just wanted to understand whether that changes things from your perspective, or do you see some realignment of sales on the CV aftermarket because of this?
So let me start with that. Tata has been a partner with Castrol for over 3 decades, and we have a relationship with Tata at the global level with the passenger car roles as well as Jaguar Land Rover. And actually, we just extended the contract globally for another 5 years. Tata decided to launch their own Genuino into the franchise workshop channel, and they're also trying a new route to market in servicing their channels, servicing their franchise workshop channel. So I think it's early days, but wish them all the best in the endeavor. We have many OEMs now moving towards their own branded play, but our stronghold is retail, and the retail is what drives Castrol profitability and future growth. So we continue investing into that, and OEMs will play into their own channel, but in terms of when the vehicles come into the market, it will be Castrol hopefully servicing those vehicles. I'm trying to remember, sorry, the previous question. Was it on commercial volume?
Was that you mentioned briefly in the press release that you've taken a lot of initiatives to grow ahead of market on CVs. So if you could kind of elaborate on that, just be more clear on that.
Yeah, I mean, I wouldn't say specific to commercial vehicle, but across the stage, we introduced new products, and I talked about, for example, Active is relaunched into the market in Q4. We focus on passenger car roles, and we hopefully going to launch another product very soon, and we'll announce it in the coming weeks. And in terms of focusing CV, we of course focus on New Gen, which is our premium segment. And accordingly, we are looking at our specialty products, and we relaunched our grease portfolio beginning of this year. So there are lots of initiatives that we're taking in terms of revamping and modernizing our product portfolio, and launching products required for the new technology, and of course to stay ahead of the market in terms of our product introduction.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management for any closing comments.
Well, thank you very much for all the continued interest, and thank you for all the really diligent questions, and for all your continuous support. And I think as we said, Castrol delivered strong results in Q4. Not only Q4, but I would ask you to look at the entire year and entire quarters. Apart from quarter 2, I think Castrol delivered strongly against expectations in all quarters, which also gives us confidence that the strategy that we set for ourselves is delivering results, and we are on a growth path, and we will continue focusing on the basics, which is the investment behind brand, new product introductions, customer expansion and innovative solutions to ensure customers have a premium brand experience. So we are excited about the platform that we've created, and we've gained. It's reassuring to see the delivery in the second half, which will set ourselves for an exciting future in 2018. So I look forward to our next catch up, hopefully in May, where hopefully we'll share further good news. So thank you, and I wish you a great day.
Thank you very much. On behalf of Castrol India Ltd, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.